Devang Mehta as well joins in at the show right now. Devang, hi, afternoon. Can't take your eyes off the weakness in the market today, especially at a time when the globe looks quite okay. Time to buy the fall just yet or do nothing?
Thanks for having me on the show, Aisha. I think yes, the answer should be not an emphatic yes, but yes, gradually, probably a staggered approach or a staggered manner to get into the markets, because I think this was the correction a lot of people were waiting for, because the market rally as well as rally in few sectors and stocks was such fast and furious that a lot of people sort of missed out on the entry point. So one senses that this is not any fall related to India. This is more or less, yes, we are surely connected to the global environment, and yes, when US bond yields again touch 5% and go more over that, this is the type of volatility it brings into the proceedings. The Israel-Hamas war, whatever happens to crude, the FII, relentless selling from the FIIs, strengthening of the dollar. I think most of this are known to the markets at this point. We are getting into our result season, into the peak of the season. Some of the banks have come up with good set of numbers. Some IT companies have not come up with so good set of numbers. So I think it's a different type of contradictory trends as well, which we are which are watching in the earnings season. So one senses that yes, this is sort of an opportunity in adversity, if I can call that. And it's a good time if somebody wants to transact over the next 3-4 months. You will get to see the election volatility. You will probably get into the festive season. You know that probably the next quarter will be a lot better quarter, and already all the discretionary consumption and the car companies are talking about good trends. So I think 2-3 months of volatility, and probably things will even out in the next 2-3 months.
Devang, have you got a chance to look at Honasa's business profile and the model as yet? And if yes, what's your take on that?
Unfortunately, couldn't look at that, but yes, awaiting the press meet as I was just listening to what you were showing on the channel. Yes, so I think probably a lot of people would be eager to know that the markets have become extremely volatile, the secondary markets, and how primary markets sort of has seen good bit of traction over the last 3-4 months. So probably how this IPO gathers momentum or steam, that's one thing to be seen. And of course, the business would be more in depth. We will study it a little more in depth once we get closer to the IPO.
Okay, let's just take a pause for a bit and address, in a piece of ET Now exclusive news. And the government, we understand, is likely to announce some relief to domestic steel producers. In fact, we learned from our sources that the countervailing duty may be imposed on import of 200 series of steel products. My colleague Prakash Priyadashi joins in with more details. Prakash?
Steel Ministry has once again approached Ministry of Finance with a new set of proposal. Steel Ministry has requested Ministry of Finance to take necessary steps in order to protect domestic industry. Other than that, DGTR, which comes under Ministry of Commerce, has also recommended to impose countervailing duties on certain category of stainless steel products in order to protect domestic industry. Taking all into consideration, Ministry of Finance is examining this proposal. As you are aware that the industry has been recommending government to take necessary steps in order to curb heavy imports of certain category of stainless steel products, which is happening especially from China. As per the details, if you look at imports from China in the context of stainless steel products have seen huge jump from 5% to 45% in last few years. So taking all into consideration, government is now examining this proposal and may reimpose countervailing duties on certain category of stainless steel products in order to protect domestic industry.
The domestic industry will get protection on account of these certain duties, and for now it seems like the stocks are reacting positively as well, whether it's the Tata Steel or JSW Steel, because otherwise of course the market is quite weak. This is the only space holding up. Devang, your view on the metal stocks and any recommendation?
I think that yes, this pocket has generally seen good strength, and it's very contradictory in nature as such. Because when you encounter a lot of global volatility, you find a lot of these businesses not doing so well. But yes, the cyclicality the deep cyclicality that this sector brings in, it's into sort of a good period. So we generally refrain from buying it more in the core part of the portfolio. Yes, tactical allocation, if somebody has a 1-2 year horizon, can probably look into a bit. But as I said, a lot of volatility can come into the proceedings. Once a market gets back on its toes, I think there are a lot of interesting sectors which we are seeing a lot of correction. So I was just reading even a lot of bank Nifty stocks are getting to the year's low or this year's low. So I think a lot of interesting opportunities will revolve in auto, financials, capex oriented stocks. So there will be multiple opportunities over here. So I think something which can turn volatile, something which has a lot of global volatility, one should sort of, at least if not avoid, then don't create very long-term positions over there.
Right, 19,129, that's where we're currently at right now. Naresh, just wanted to understand if, you spot fresh shorting opportunities, any individual stocks that you may be looking at?
So some bit of a correction could be possible in a lot of stocks which have rallied a lot. So one space is something like a Titan, which has made a classical double top. So that could drift towards the 3,000 mark in the short term. PFC, which has rallied a lot, can see some bit of a 5-7% correction from here. Same way, a lot of IT names, the mid-cap IT pack has a room for downside. So something like a Birlasoft looks like topping out. A Polycab has made a classical topping out. But it could all be just correction. So the viewers have a very strict stop loss on these shorts. Basically a 2% stop loss, a 6 to 8% downside target. And focus on names which have rallied a lot. So where there could just be a slow and steady correction. So viewers, a lot of stocks need some bit of correction to normalize, and that is where something like Titan, Polycab, etc. could be shorts on current levels as well as a little bit of a rise from here.
Okay, so point taken as far as some of these stocks are concerned, but shifting focus as to what's happening in the rest of the markets as well. WealthSpan India 11% higher. Aster DM has actually seen a sudden spike, 8 to 9% higher, and then PDS as well is a stock in focus. But then a lot of earnings also lined up for us. Jubilant Food is one stock that the street watches very closely to get a sense as to what the LFL or SSSG growth is going to be like. Don't keep your hopes too high because the decline is likely to continue even if we'll see a revenue improvement purely on account of the fresh outlet addition that they have done. What are the other internals and what's the management commentary that we're watching out for? Let's go across to Vinny.
So yes, in terms of numbers that we're expecting from Jubilant Food, this time around we're expecting a revenue of growth of around 4% only. Revenue is expected at 1,340 crores. Now in terms of the profits of the company, we're expecting a sharp decline of 29%. Margins also expected to see a contraction of around 400 basis points. EBITDA margin expected at 20.4%. Like-for-like growth, which we keep an eye out on, that's the number the company reports instead of the SSSG growth. That's expected to see a decline of 1%. Again, this time it's under pressure mainly due to the weak environment that's there. Discretionary spends that have been a lag as well. So that could be impacting the overall revenue of the company as well as the like-for-like growth. Now, margin contraction obviously is due to the raw material price inflation that's there. And in terms of the operating margins, mainly the negative operating leverage, higher freight cost, as well as in terms of wage inflation. That is something that is weighing on the operating margins of the company. Commentary is going to be important to watch out for in terms of the demand trends that we're expected to see coming in from the company, especially during World Cup. Have they seen any increase coming in this last 15 days as well? Other than that, demand trends in delivery, dine-in, tier 2 cities, how is that doing? Competitive intensity, pricing, how are they shaping up in that form? As well as like-for-like growth, what's the sustainability on that front? Keep an eye out on those fronts on the commentary.
Right, okay, that's the expectation from Jubilant Foodworks. Of course, you've got Tech Mahindra as well, which is lined up for its earnings. Anisha, what can we expect?
Another weak quarter. That's the expectation from Tech Mahindra yet again. But the big question is how the stock will react because it's managed to hold up quite okay versus the kind of underperformance that we have seen purely in terms of earnings. This time also we are expecting a 1% decline when it comes to constant currency. Margins are expected to deplete further. Remember in FY22 the margin levels were 14-15%. Right now it's 5.5%, and I don't remember seeing a single digit margin profile for any of the IT service companies. So a very bleak margin picture. The question Street is going to ask the management, is this the bottom or is there going to be further weakness? Because this time Street is expecting there could be a one-time cost on account of the restructuring, which is again a probability that the Street is hoping for with the new management and the new leadership coming in at top. But other than that, deal wins have been okay for them. That momentum might be steady, but it's the margin profile which will be weak, and the commentary on the communications vertical will be critical to watch as well. Kunal, what's your take on the charts of Tech Mahindra?
Well, that stock somehow has also gone through a correction in the last 1 month. I think as compared to many of the other large cap IT names, even this stock has gone through a correction. Now, the concern with many of these large cap IT names and even Tech Mahindra is that the stocks are breaching below their 200 moving averages respectively, and that I believe could be a point of concern. So I think Tech Mahindra is just 0.5% or maybe 1% away from its 200 DMA. 1124.25 is the 200 DMA. Stock is at 1139 approximately. So these stocks are trying to now retest their long-term averages, something which the stocks have not done, I think, in the last 5-6 months for themselves. So this could be a real retest of the way in which many of these IT stocks had rallied up, showed a lot of resilience from the September 2022 lows. I think even the likes of Infosys, if I'm not wrong, has already confirmed a break below its 200 moving average. So many large cap IT stocks have already corrected. Tech Mahindra is on the verge of going through a second round of major correction. So I'll wait out for that breakdown below the 200 DMA to initiate a fresh short on the stock.
Okay, point taken. That's the take coming in as far as Tech Mahindra is concerned. But Axis Bank, that's the other one to watch out from the Nifty space. Let's go across to Harsh to get a sense as to what the street should expect.
Right, let's start with net interest income for Axis Bank, expected to come in around that 12,000 crore mark, which is a 16% uptick on a year-on-year basis. Also, pre-provisioning operating profit expected to come in at around 8,600 odd crore. Again, 11% uptick year over year. Provisioning is expected to continue to remain benign. 800 crore is where the provisioning number is expected. That's what the larger consensus looks like. And therefore, profit after tax will largely be flat on a sequential basis. 5,800 odd crore is the expectation for profit after tax. Credit costs will continue to be benign, as I did mention, with regard to provisioning as well. Provisioning, in fact, 23% decline on a sequential basis if it comes around that 800 crore mark. Let's also talk about business growth, because that one will be key in focus. You're looking at the Citi acquisition as well, how the Citi acquisition really builds with regard and what it's contributing to business growth will be in focus, and both assets as well as liabilities expected to grow around the 4% mark. So deposit growth expected to be around the 4% sequential growth number, and you're also expecting the loans to be or see an uptick of roughly 4%. And of course, going forward, how is the deposit growth traction as well as how is the traction on the credit cards business? All of that will be in focus, as well as what are the benchmarks that they've internally set with regard to Citi and whether they're achieving it will also be in focus with regard to management commentary.
So that's Axis Bank for you. Of course, the management will be on ET now at 5:15 p.m. So we'll watch out for what the commentary is as far as Axis Bank is concerned. But since we're talking about financials, let's also address the news flow on Geo Financial Services, because it seems like the latest shareholding data is suggesting that promoter has added 6.1 crore share since listing. That happened just, I think, a couple of months ago. Of course, the stock has been quite sideways. It had already seen that it had gone below the level of 200 earlier. From there, it has seen quite a bit of recovery. And I think listed around 180, 190 if I have it right. But nonetheless, Devang, if you've studied Geo Financials, what's the take?
In fact, don't track Geo Financials. It would be difficult to sort of comment on it.
Sure, as far as Geo Financials is concerned, and I'm guessing it will be difficult for the technical experts as well, because it does not have too much history to really watch out for. But let's take the BDS Ideas. Naresh, what's the buy today, sell tomorrow idea, if at all, or is it STBT?
So a sell and a buy, so both from the same sector, so more like a hedge trade. A sell on PFC, which has rallied a lot and showing signs of topping out. Stop loss at 242, target price of 232. Second is a buy on Power Grid, which has been showing relative strength, holding on to the support. Stop loss at 198, target price of 205.
Sure, so that's the one buy and one sell idea coming in. Kunal, what about you?
So I'll go with Alchem Labs is the first stock to suggesting as a buy. The targets for the stock is 36.50 and stop loss for this trade is 35.30. And the second would be a sell on Trent, something which we discussed even last week. Looks quite weak in terms of the charts. The stock is trading below the 2000 levels, which is a confirmation of a double top formation for the stock. So targets of 1900, stop loss at 2050.
Okay, but Naresh, is there any index trade that one should carry over from today? Because 100 is being held for now, but just about 8 points. And I think we're at the lowest point of the session now.
So I would still wait it out. There is no clear trend. The drift has been lower. The breadth is not great. So a bounce, one cannot be looking out for a bounce trade because the risk reward is 1:1. On the short side, again, the risk reward is 1:1. So at these levels, one is better off not taking a trade on the index waiting it out for maybe another few sessions.
Right. Just looking at some of the other movers in trade and, pressure within the broader markets, of course, is on a JK Cement. Z is significantly down. You are seeing Bharat Forge as well slip quite a fair bit. And then, of course, Shriram Finance as well, which is lower by about 3%. There's Godrej Properties too, which is seeing some pressure. It's down about 3% as we speak right now. There you go. That's the stock in focus for you. Kunal, year to date, it continues to be realty, which is seeing the maximum gains, or some other sector has taken charge?
I think realty is the one which is looking, in fact, even defense, but there's no sector as such, Nifty defense sector. But I think that's another sector which has done reasonably well. Even the PSUs or the PSE index has done quite exceptional. In fact, many of the high beta names from the PSUs have also managed to give more than double-digit kind of returns. But largely, I believe that the real estate pack as of now looks to be a bit more on the overbought side. I would still be bullish on the likes of DLF and Anantraj, but I think maybe waiting for a correction of another 5% to 10%, even from current levels, could actually be a good strategy.
Sure. Actually, I stand corrected on Geo Financial Services. It's listed at around 260-65 thereabouts, and it hasn't gone below 200. It has just managed to hold on to 202 as the 52-week low right now. So, still closer to those lowest end of the range that it has traded in, but had listed around that 260 rupee mark. Separately, what's holding up today, or at least was holding up, was some of the telecom names. Tata Tele, for instance, was doing okay. We, of course, got you that exclusive story on Vodafone, which is likely to get some fund infusion. And then you also have Tejas Networks, which was holding up okay. Is there any name, Naresh, from this pack that you would look at?
Which particular sector?
Telecom.
Again, out here, Bharti Airtel has been a slow and steady performer. At 900, 920 would be a good zone to buy into the name. And apart from that, watching out for Vodafone Idea, because it's been consolidating at the 10 to 12 mark. So if it can cross 12 again, then it's an indication of a trend change for the stock. So watching out for Idea. Indus Towers, there was hope. It has come back to the same retest of 165 to 175 band. Made 3 attempts around 195. So overall, the sector has been relatively better in the current markets, but Bharti Airtel remains the best one. It's been a slow and steady mover, does not see spikes, but 900 to 920 zone would be a good zone to accumulate Bharti Airtel.
What about BSC, Kunal? Is that a stock you've looked at?
Yeah, of course, looked at BSC, but then very difficult to attempt a trade at current levels because the stock has been just going through all the major resistances. So, the earlier resistance for the stock was around 1400, then the stock made a high of 1490, 92 approximately, breached the 1500 mark, and now from 1500 in just the last 3 or 4 days, it's climbed up to almost 1800 levels today. So the pace of rally the last 4-5 days has intensified. Of course, the stock is at a major overbought nature in terms of indicators. So that would be one of the major reasons why I would not initiate a trade. But I sense that if in case the stock cools off, the cool off for the stock would be very sharp, and I would probably be looking out for at least a 1450, 1500 kind of a corrective wave for BSE.
Okay, that's the take coming in on BSE right now. Just want to mark some of the other losers in trade. While, of course, there has been pressure on some of the large caps like an ICICI Bank. Pharmaceuticals, of course, has been quite the weak link today. There's Bharti, which is down about 1.6%, weighing heavy on the telecom sector. Infosys, Tata Motors, Eicher Motors. These are some of the significant losers in trade. Besides that, of course, there's lots within the broader markets as well, which is bleeding. Look at PFC. Polycab is down about 2.5%. There's also the likes of Manappuram, UBL, PI Industries. There's, of course, HAL, which is down about almost 2%. There's Indus Tower, which is down about 2%. And then, of course, Indian Hotels as well, which is seeing a fall of about 2% as we speak right now, but still at levels of 390 thereabouts in trade. Devang, just before we let you go, if any buy strategies you have as a house call?
Yes, so on a thematic basis, and I reiterate this again and again, very important to note that though there can be debates about a bit of consumption, a bit of credit growth when we talk about it, But most importantly, the capex has been extremely strong, be it the government capex, which we talk about. And we know that this year the capex is roughly around 10 lakh crore. And when we talk about private capex, there are all signs that show that in the next 12 to 18 months, and in fact, if there is a longer term horizon of 24 to 48 months, I think a lot of these signals would have started to come out. A lot of brownfield, greenfield projects are getting set up, and capacity utilizations are nearing their peak. So I think a lot of these candidates, be it capital goods, though some of them are expensive, but this correction is ensuring that most of these companies again come back to their median PE levels. I think there are a lot of opportunities in the capital goods sectors, allied sectors. There is something in bearings. There is some power ancillaries. I think as a theme, if one plays capex very well, plus credit growth, plus a lot of the banks who support capex, I think this as a theme would play out very well. A basket of capex-oriented stocks, which includes capital goods, infra, cement, be it even building materials to a certain extent, because real estate also does well. So this side of the market, which earlier or the last 5-7 years have not seen much probably light of the day, this will sort of expand very well, the market cap of this company for the next 2-3 years.
Okay, last 30 seconds and we are closing the shop with a downtick of almost 0.8% on the Nifty. 100 has been held. That's 19,100. But even if you look at a Sensex, sharp cuts across the board. The advance decline ratio is favoring the declines by a whole lot. It's the banking index, which is down a good 200-300 points. The PSU banking names were trying to hold up, especially the likes of IOB and Bank of Maharashtra. But by the end of the trading session, all the sectors have actually ended in the red, including metals, despite the outperformance that we saw from the likes of Tata Steel, JSW Steel, on account of that story that we brought you that there could be some policy support for the domestic steel producers as well. Media, that was one of your top losers in terms of sectors, realty, IT, and then follows banking and pharma. In terms of stock-specific names, it's ICICI Bank, which has taken 8 on the chin, down about almost 2%. You had Cipla, Adani Enterprises, Apollo Hospitals, NTPC as some of the other sole losers. Coal India, Tata Steel, Hindalco, Tata Consumers, SBI, these are the stocks that managed to hold up okay. But clearly a weak trading session on the last street and important levels being broken. But tomorrow is the day of expiry, so we'll watch out for how it pans out. For now, it's curtains down on this edition of the show.